Spoiler alert, guys. The Titanic sinks at the end of the movie.
Yeah. This was about the most obvious spoiler ever. It was bound to happen. Interest rates are going to go up in 2022. Who would have thought? And they went up a little bit, and I guess the markets are panicking over the most obvious thing that was ever going to happen in the history of obvious things.
When the economy gets shut down for many, many months, and you drive interest rates to the ground and create all this speculation in the marketplace, and there's no real economy
and pump in something like
up.
80% of all dollars that are in existence right off the bat. Yes, eventually inflation's going to come up, and then you're going to have to do something to slow the.
You're going to have to deal with it in some way. To deal with high inflation or raise interest rates to combat it.
So, as we said in a previous video, this situation where interest rates were this low with inflation this high, and interest rates, like I got a 3% interest rate on my personal residence late last year. We were getting 4s on investment properties.
I've heard much lower than that.
And I've heard of loans in the 2s, and inflation is in the 7s. I mean, that makes no that spread makes no sense.
Yeah, you can't keep that going.
Yeah, so the Fed voted 8-1 to raise.
Who had the one?
What?
Who had the one vote?
Yeah, that one vote not to raise the discount rate. For the first time since before COVID, it's still at like 0.5, but they say they're planning on getting up to 1.9 by the end of the year and 2.8 by the end of 2023. And a lot of this is, especially the reason they're yapping so much, they usually don't talk this much, as they like kind of telegraph where they're going with it, is because they're trying to cool down the extremely high inflation that's going on right now that's causing all of these a lot of discontent across the nation.
Yeah, inflation's uncomfortable. In my lifetime, inflation's never really been a thing to deal with before. Before I was born, this was the thing. I mean, in the 70s and early 80s, this was huge.
It is interesting. There are a lot of real estate investors be like, oh, this is so easy, for the last 10 years plus. And this interest rate environment has been extraordinarily odd. We are still at historically low rates. And
we're living through the exception is what's going on.
I mean, the 70s, they had interest rates in the 10s, 11, 12. I mean, well, hopefully we're not going back all the way there.
True.
But basically, the reason the Fed wants to, one, cool off the inflation, both with raising interest rates, but also telegraph to the market that that's coming and try to just get, I think, people psychologically prepared for what should have been obvious. What we were saying would obviously happen, that this situation cannot maintain itself forever. It can't even maintain itself for that much longer without inflation getting out of control.
Now, on top of that, everybody thinks that means, okay, well, that is the sign of the crash coming. They're going to try to curve inflation with interest rates, and that's going to bring on a real estate collapse.
It's going to nuke the real estate market. That's not going to happen.
No.
It very well might lead to a recession if they go hard enough with it.
Which will hurt real estate.
Yeah, real estate will probably be pulled down. It will at least be cooled off. I think the only recessions on record where real estate didn't go down were the 2000.com, which there was other reasons for that, like kind of led to the 08 one, and also the COVID recession.
Again, we're living through this real estate environment has been the exception, not the norm with things. And so people might have to get more creative with some of the real estate deals. I mean, Subject 2, from my understanding, was kind of created during the 70s and 80s.
Loan assumptions, seller financing became a big thing because the rates were so high. I don't think we're going to get to that point. But just like these rate increases are nothing to be shocked at. We were living through an incredibly low interest rate environment. Now we're coming back to something a little bit more, normal. But they're still very low. And they're still, again, it's not, you got to think in real versus nominal terms. Like a real rate of interest is still negative because the inflation rate is 7+%. So if you have a 5% interest rate, you're still paying less than the inflation rate. If you're in a hyperinflationary environment and it's going up 50% a year and you're getting 25% interest rate, that's not that high, actually. Yeah. It's just everything is a mess.
It feels a lot different because you feel like your returns are less, but the assets are appreciating just because the dollar's going down.
Inflation makes things messy, but and we have another video on this. The reason that we shouldn't be so concerned about a real estate collapse is basically supply and demand.
Yeah.
Right now, supply is way behind demand. Demand is blowing supply out of the water right now. There's a 3.8 million unit housing shortage. Rents and prices are going up in large part because of inflation, but also in large part because there's just there's nothing to buy. And everything is highest and best.
It's real demand.
Oh,
I mean, in 2008, it was kind of fake demand. It was manufactured demand by making the effective price cheaper by all these crazy interest rates and giving people loans that couldn't.
Well, the interest rates are still there, but there's doing the ninja loans, no income,
that
no
created
job, no
demand
assets.
with no economic backing to it.
Stated income, just somebody with you got a pulse. Here's a loan.
So
there's a lot less of
that demand of people who actually have money and have assets and have income that want real estate, that doesn't go away. Just because interest rates go up doesn't make that go away. And maybe they can't pay as much because interest rates are high, but they still want real estate, and there's still more of them than houses available, making the price go up.
And if people are talking about like Wall Street buying them up and they're going to abandon it, that they might to a degree, but they still own less than 1%, a tiny fraction of the amount of investment properties out there. And if they sell them, it's just going to be to other investors or homeowners. I mean, it's like people need a place to live.
At a time, too.
And so, or they're going to do it a piece at a time. They're not going to try to just.
Well, they're going to take their whole. Yeah, exactly.
But I mean, they still own a very small percentage of the market, and people need a place to live, and there's a housing shortage. So they're going to find ways around it. Renting out bedrooms and that kind of thing. But there's only so much of that you can do. You need a place to live, and there's a housing shortage, and supply and demand is undefeated.
And I mean, when you think about it, we had a pretty shocking economic event happen.
Yeah.
And to expect interest rates to stay low, inflation to stay low, and to get these amazing returns, you're going to have to pay for it in some way. If they keep interest rates low, we're all going to pay for it as citizens, as people who have dollars in one way, or they're going to raise interest rates, and as real estate investors and people invested in the economy, we're going to pay for it in a different way. And so we have to pay for it somehow, and we're just kind of choosing how to do it. And then also, you can't expect returns on aggregate to be the same when you've had these economic, clashes in the system.
I think, obviously, rising interest rates is going to have a negative effect on real estate. I think a lot of people, you always fight the last day of the last war instead of the first day of the next war. You always think of the last recession. And this one, the signs of it are much more similar to the problems of the 70s than they are to the problems of 2008. And so, we're going to see rising inflation. They need to increase interest rates to match. That will cool off the housing market, but it will be buoyed up by that supply shortage, that real demand. And so we should see real estate prices probably cool, but if someone thinks that the increase in interest rates is going to blow up the market, I don't see that at all.
If inflation is at 6 or 7 and you're getting an interest rate at 5 or 6, you're still doing pretty. Your returns might not look as good on paper, but they're still actually really good.
In a high inflation environment, you need to start thinking in real terms and not nominal terms. In a low inflation environment, they're so close to each other. 2% inflation. Okay, you can just think like if your properties went up 10%, they went up 10%, even though it really went up 8% because there's 2% inflation.
And it's always going to bring in creative opportunities for people. That's what they did back then. They created creative ways to invest in real estate, and as soon as one problem exists, new creative ways to solve that problem get created.
And we had talked about in previous videos how house hacking or taking advantage of the cheap debt to buy properties, maybe not at as big a discount, a smaller discount, instead of getting a 25% and burning the property, getting more like a 10% plus really great financing. That was the way to go in this environment with these really low rates. Now rates are coming up. They're still low. Like, I don't know how much more time you have, so I would recommend going now.
I don't think they're getting lower.
Yeah, they're not going down. They might oscillate a bit here in this volatility, but they're going up long term.
Yeah.
And so this is a good time to get debt, and we're probably moving towards sort of a hybrid where as the market cools, it's not going to collapse, but it will cool a bit. That will offer more opportunities for higher discounts, but also you're going to have to pay more on interest rates. So instead of this kind of extreme, go for the interest rate, get good performing cash flowing properties with really low interest rates, or do a house hacking deal where you're living there, you got that great interest rate, then you move on, you keep it, you get to keep that really good interest rate.
Yeah.
Now kind of working versus just going for we're looking for big discounts because there's lots of properties and there's lots of motivated sellers and value add opportunities. Now it's kind of we're moving towards an in between area.
Yeah. And I mean, again, we don't think the real estate market is going to collapse. We've said that many times. If you want to know more about that, check out this video here and subscribe.
Thank you.